Great. Thanks, everybody, for joining us today. I'm Jason Gewirtz. I'm an executive producer for CNBC. I also wrote a book called Israel's Edge about one of the most elite units in Israel. And many of them go on after their army service to be technology CEOs. And that's really who we have here today. A lot of people are really have their finger on the pulse of Israeli technology. So I'm going to let them actually introduce themselves. Please, go ahead.
Hi, Miri Segal, the owner of, is it on?
Yes.
The owner of MSIR, an outsourced investor relations services firm dealing with global technology companies. Most of them are Israelis.
Hi, Ariel Dor, co-CEO at Foresight, Autonomous Holdings. Foresight is an innovative leader in vision sensors for automotive space, autonomous vehicles, and active safety systems. We are traded in Tel Aviv Stock Exchange and also listed in Nasdaq, and one of Miri's very happy clients.
Crystal Shen. I am with Jefferies Technology Investment Banking, specifically focused on equity capital markets. But prior to this role, I was focused on building out Jefferies' technology corporate access platform, which included kind of taking investors out to Israel on an annual basis, and it's on a continual basis still. So I've had a lot of exposure and the privilege of working with Israeli companies, kind of from the investor relations perspective.
And Crystal, one of the neat things that you did during your time there were these tech tracks. Can you tell us a little bit more about the reaction? A tech track, as I understand it, is basically you would take potential investors to Israel to meet with technology companies and all sorts of companies, correct?
Sure. So the tech trek started about 3 years ago, and the original concept was for us to bring global investors into the region just to get exposure, and it's really kind of evolved, I think, on a much broader level from just that concept of bringing investors out there. It's become kind of a twofold mission where, kind of from where I view it, we're providing exposure now for the corporates as well, from private through public. We're giving them a platform to network globally. And I think like the things that I've taken away from the tech trek really are that we need to increase the visibility for Israeli companies, and when that happens, the institutional investors that we've brought on board have really reacted well. It's given them an opportunity to deeply understand what the ecosystem is like, and it's a track that we hope to kind of continue to expand, and we've got a lot of great partners at Jefferies and partners that we've worked with across the ecosystem that have helped us out with it.
So the reaction's been unanimously positive, I take it.
I think so. The initial pushback, I think, for us was kind of concerns around the region, and those concerns quickly kind of dissipated as we have a whole group of investors that have been going on a recurring basis annually now. And it's really because they've realized once they arrive in the region, and they've kind of told their fellow investor buddies as well, as like, this is the track that you need to go on an annual basis.
And your first trek was a personal trek 5 years ago.
Indeed.
I'm just curious about your personal reaction to the first time you visited.
It was part of the inception, and it's kind of what caused me to reach out to Mr. Nati Ganor over there to kind of push him into the effort. I was just kind of amazed on my personal visit of kind of how much was going on. I had been covering tech at that point for 4 to 5 years, and it was necessary to kind of bring it into a professional environment afterwards.
And the growth has been amazing even over just 5 years. So Miri, I saw you nodding in agreement when you said you need to get more attention to these Israeli companies. As an investor relations professor, how do you do that?
So what we do, we really make these Israeli companies look as if they are American companies, with the twist and the innovation of an Israeli company. So what we do, we try to really Americanize the story and make these companies more accessible to US investors in terms of don't make the distance a barrier. Come here often, meet investors, present at conferences, behave as if you are an American company. And if you do that, and if you're familiar with the market and know how to tell your story and meet investors on a regular basis, not just when you need to raise capital, but when you just want to update them, then you'll see more interest and you'll see more investments flowing that way.
Are they receptive to that?
Yeah, so obviously, when a company starts working with an investor relations firm, it means they understand that an effort should be done. And it depends. When it's a young company, you need a lot of more hand-holding and explanations about how the US capital market is different from the Israeli capital market, how it is structured, how you need to tell your story to investors. And when it's a more mature company, so obviously it's much easier because they've been doing it for a while and they know that it's a long, ongoing procedure. And when you do that, you see, it bears fruit.
So there are, though, cultural differences between Israel and in the United States. And you were a investor relations and a public relations professional in Israel before moving to the United States, correct? How do you bridge exactly those gaps? How do you approach these executives? How do you do it?
Yes. So indeed, there are differences, but I have to tell you, it's part of the charm. So in the beginning, there are some people that may look at it as an obstacle. It's not an obstacle, it's just something you need to be aware of, and as you said, bridge the gap. So if it means, being more patient with the fact that in the US, not everything happens overnight. You need to take your time, you need to build a relationship. There are so many companies here. If people will believe to everything that you say, they're probably not smart enough or not experienced enough. You have to understand that it takes time to build the relationship. You have to understand that the investors here want to see you hit the milestones and really keep the promises that you give. And you have to do it on an ongoing basis. And once they understand it and they become more patient, I think that it pays off.
All right, so that's from the executive side of the question.
Yes.
What about from the investor side of the relationship? What is the difference between the Israeli investors and American investors?
Actually, it's just such different markets in terms of, first of all, in terms of size. If you look at the US market, if you combine the New York Stock Exchange and the Nasdaq companies, the accumulated market cap is like $16 trillion. These numbers are not anything similar to what's going on in Israel. Or if you look at the issuance of stock last year, I believe the statistics talked about something like over $190 billion that was raised here in the US. These numbers are not anything near the Israeli market. When you compare multiples that companies trade on the TASE compared to the US, so multiples here are between 2 to 2.4 higher compared to Israel. So that's why actually you see more and more companies, even the ones that already trade on the TASE, come here to the US, and that's what I do. I try to show them, how the market here is more complex and how they can get higher valuations here.
All right, so I want to turn to Ariel. Ariel just listed on the Nasdaq. Foresight just listed on the Nasdaq. Can you tell me a little bit what you learned from that experience and how Miri helped you through that experience?
Well, first of all, in Israel, I wear polo shirts, and here I wear suits. That's the major change and different. No, seriously, it was quite agonizing to write the prospectus, getting through all the little details, getting into the non-deal roadshows. And we just registered here. We didn't raise any money. I actually raised around $30 million only in Israel through private placement with our investors, some of them strategic investors, car importers, and others. And we decided that if we are already listed in Israel, we should get listed here because this is where everything going on right here. So it was quite agonizing. It took a lot of months, get through all the little details, of course, and it was, but an amazing experience. Meeting with different kind of investors, different kind of questions. We are quite a unique company because we are yet pre-revenue and pre-product, and we are a technology company, a technology startup in a very exciting space. So it was a very nice experience for me personally.
You have some unique training. You're an F-16 fighter pilot. You did 9 years of service. What is it that you take from your training in the military, from the Air Force, into the CEO's suite?
So I would say the culture that I was raised in from the age of 18 was first, when you get up in the morning, ask yourselves if the goals of yesterday were accomplished. Usually the answer is no. If the answer is yes, you're doing something wrong. You probably didn't put the bar high enough. And then why and how did I do such wrong, and how can I do better? And that's the culture that we live in our company, and what I'm trying to put to my team on a daily basis. It's not very, I would say, it's not that easy, it's not convenient, and it's not, sometimes it's not very encouraging, but this is how we work. We always improve ourselves, and this is how I know we should work, and this is what specifically I took. And also, not to be afraid to dare on certain, I would say, I'll give you an example. Mobileye did their IPO in 2014, I think, something like that. And none of the Israeli startups since then has been trying to do a vision sensors for active safety for autonomous vehicles. But we did. And we believe we can do even better. And we are trying to dare this giant that went very successful. And it's something I think we took from this culture and military background.
So you mentioned Mobileye.
Yeah.
When you woke up that morning, you saw that Intel had bought Mobileye for $15.5 billion.
Yeah.
What was the first thought in your mind as an autonomous driving CEO?
Well, we didn't think, we reacted. We raised money, basically. Once the deal went up, investors in Israel looked around and wanted to invest in the next Mobileye, and we were listed. Other startups in Israel usually go private, and we just took that chance, and we raised in 2 days around $15 million. And this really helped us come very strong to the US markets. We don't need any capital raising right now, and we are backed and strong. We have strong financial reports.
So this is for all three of you. I'll start with Crystal. When I get up in the morning, I can look at my E-Trade account, and I can trade pretty much in any market in the world, okay? Same for my Fidelity account, okay? Mm-hmm. Why list in the US? Why is the US the place to be?
Sure. So if we step back for a second and just take a look at the broader market conditions right now, we're entering a year, hopefully by the end of this year, we'll hit 30 tech IPOs or so, but we're in a bit of a slowdown right now where if we don't hit 30, it's going to be 3 years in a row since the dot-com bubble, essentially, where tech has not reached that 30 mark. And investors that we talk to, especially kind of the large US portfolio managers in tech, they're searching for alpha, and the FANG trade is extremely, extremely crowded right now. And they're just searching for these new issuances that are going to produce that alpha for them. And at this point, I mean, when companies come out, and I think especially Israeli companies, it's an opportunity, whereas Miri discussed kind of the differences in discounts in between the exchanges if you were to list locally versus the US. There's a lot of opportunity to list in the US now because of kind of that dearth of IPOs that are out there, the dearth of issuances. And so I think just from that perspective, like investors are starved right now for new issuances. And there's so much innovation coming out. We have a lot of management teams with a lot of credibility, with a lot of innovation behind them in Israel. And that's kind of one of the primary things that we think about when we look at Israeli companies listing in the US.
Mary, do you want to answer that question as well? Why the US?
Yeah, I think that I started answering it by explaining how large the market is and how great the access to capital is. It's the largest in the world. So if you do it here, and it provides you much more visibility in terms of acquiring companies or being acquired even. So you're more under the radar of many companies, other companies.
Understand it. Did you ever consider listing anywhere else other than here at the Nasdaq?
No.
The Nasdaq or bust?
Yeah.
Very good. Crystal, why are, clearly the numbers are down for IPOs.
Yeah.
Can you tell me why exactly you think that is, and whether or not you think there's going to be an upsurge?
We're starting, I mean, November right now is probably the most active month we've seen in the public markets. And this week, there's expected to be at least 3 tech IPOs that'll price. So we are hoping, and our team kind of jokes around every year, we think it's going to be the year where there's going to be that resurgence, but we actually are feeling that wave right now. I mean, the market's extremely resilient. Volatility levels are kind of at some of their lowest points. So we do expect to see that resurgence. What we see, though, also when we're talking to private companies, though, is there's a great level of access to private capital markets. It's much easier for private companies that are exhibiting solid growth to raise private rounds, possibly at valuations higher than they might be rewarded in the public markets. Or over the past few years, they've achieved valuations in the private rounds where a public issuance might represent kind of a down round for them in a sense. And so just that ability to raise in the private markets at this point, that's probably the primary reason that we're seeing companies stay private for so long. And the management teams are able to maintain their control. They're able to kind of continue to operate their companies as they want to versus kind of the cumbersome process I'm sure you went through as you were going through going public.
I'd like to add that it's exactly, I mean, if I follow what she said, you need to focus on finding the right partner to do that. So for example, you know, Jefferies is so experienced with technology companies and has a great reputation. So it's all about picking up your partner that you can really believe can get the deal done and not just going through this journey as if it's some kind of an experiment, and then at the end, if you don't get the deal done, it could be devastating for a company. So what I would say is obviously focus on the US market, but invest enough time in screening, in really thinking about, you know, the real partners that can take you, and don't think about just the day you raise the money, meaning that's a key, of course, which company can really raise you the money, but think about the day after as well. And I mean, because we have Jefferies here, I can clearly say, also from my experience, it's not just about raising the money, it's about the full support that a company like that takes you on the road, or being innovative in taking you on tours like what you do. You really take investors. How many companies really take investors to the other side of the world to see the technology? So elements like that really make a difference. So you need to focus on picking up the right partner.
So picking the right partner is one thing, but how about timing? How do you know when the time is right? How do you advise your clients that now's the time to do it?
So there are 2 things. I have clients that are already public, meaning, okay, when is a good timing for a secondary, for another round? And there are obviously private companies that need to pick up the time. When it's an already public company that is thinking about a secondary, a capital raise, you have to focus on several things. The market, obviously, market conditions, you know, as it was just mentioned, it depends what's going on in the market. Is it doable? You also need to think about similar companies in the same space and the same size in terms of market cap and the amount that you would like to raise, and check whether deals like that were done recently. And, you know, the market also cares about trends. There are just some, you know, like Ariel just mentioned, automotive. Suddenly there is a big deal that was done in the space, and automotive now and autonomous vehicles is just the most interesting thing. Take advantage of that. You have to be always spot on, I mean, in terms of really feeling the market and taking advantage of it. So then you'll know that the time is right. And in general, when the time is right, I usually consult companies. You never know what the market will do. If the macro environment indicates that it's the good time to do it, just do it. Then you'll find what to do with the money that you raised.
Why was now the right? You listed just a week ago, right? November 10th?
No.
November.
5 months ago.
Oh, okay. So, okay. So
June.
What told you that was the right time?
To do the listing.
Yeah.
Well, actually, for us, it wasn't a matter of timing. We just finalized the registration and we listed, because again, we weren't here for asking for money or raising any capital. Yeah, we came very strong, and we just wanted to be listed here, get the exposure, meet the investors, plan the next rounds if we'll need them in the next year or so. So that was the whole purpose.
Larry Fink, BlackRock, recently said that American companies are more expensive for a reason. Do Israeli companies and foreign companies price at a discount? Do they trade at a discount? Is there a discount?
Absolutely. Absolutely. And unless you're, we talked about Mobileye, so that's a great example. Unless you are a first to market, a leader with a very strong brand, which I can really handpick the number of companies that are like that. Usually foreign company, by being a foreign company, you get a discount. And the reason for that is quite, it's also the nature of people. Something that is foreign and outside of the country, you're less familiar with it. You think that it's more distant. You think that the local, sometimes I hear from investors here, traders in Israel have, a competitive advantage. They're close to the market. It's such a small market. They always know what's going on there before us, or they read the Israeli press. Everything goes out to the Israeli press. So there are these misconceptions sometimes that happen. And also by definition, in the US market, there are some funds that by definition cannot invest in foreign companies. However, as I mentioned, the US market is so large that Israelis can overcome it. And I think that thanks to all these conceptions of startup nation and the great advantage that Israel has as an innovator, you can overcome it by really Americanizing the story and doing all the right things as if you're an American company.
If I can add on to that, I think part of it too, the way to close that discount, whether the management teams are coming from that private background looking to go public, I think it's really establishing a cadence of kind of beat and raise. Like even when you're private, it's how you're communicating, that don't just wait until you're actually ready to go public and start talking to investors like 2 or 3 months before or during your testing the waters. A lot of the management teams we're working with these days are talking to us 18 to 24 months out and establishing that investor relations program much further out. And they're acting as if they're public companies even when they're private. And so they're kind of penetrating the major US institutions so much earlier that it builds out that relationship and that trust. So by the time they are ready to go public, that discount, there's a lot of trust that'll start to close some of that discount and a lot of credibility that's built.
Absolutely.
So Foresight owns a percentage of another company that's here today, Real Vision. I don't know if Real Vision's here yet in the audience. What advice would you give to your colleagues over there about this process?
First of all, not to be afraid. It's an exciting process, and in my perspective, it's a very good process, and it allows you a lot of flexibility. Now, it's a lot of headache, of course, the bureaucracy, and you become much more transparent. But I think taking the cons and pros, you get the right exposure. You have an amazing tool to raise money and to go and close deals, and again, a lot of exposure. And all in all, I would say that's a smart move to go public. Again, in my perspective.
I want to dive in a little bit more on your company now. Uber is driving people without an assisted driver now in Pittsburgh. Waymo, the Google or the Alphabet one, just decided that they're going to do the same thing in Arizona. Are we ready for this technology?
So I'm a little bit more pessimistic than others in talking about autonomous vehicles, maybe because I'm really in the inside of the challenges and the problems that this industry face. We will get to autonomous vehicles, I'm sure. It's not 5 years from now. Maybe driving in a controlled environment, very well mapped in Arizona or in Pittsburgh is one thing, but driving in the rush hours in Manhattan or in Buenos Aires or in Barcelona or somewhere else is another thing. And we will get there, but I think it's a little bit more time to get there. And there's a lot of hype, of course, that serves sometimes the companies to make declarations. It's sort of a race of declarations. But if you got into the technicalities and the inside, you see that there are still a couple of challenges that are not addressed.
So the reason why I asked you that question is that's not probably what a lot of investors in your company probably want to hear immediately, or is it? Tell me about what's their reaction when they ask that question, because surely they do, and you tell them that.
Well, first of all, I'm saying my opinion, I'm being honest. Foresight doesn't develop specifically for autonomous vehicles now. We took the challenges of bringing the gap and bridging the gap from active safety to autonomous vehicles. Now, for example, the number one selling feature or most important feature is autonomous emergency braking. We decided strategically to start with China because in China you have 1/3 of the global vehicle being manufactured in China, and the current percentage of active safety system, or AEB, is 5%. Now they came out with new regulation that from beginning of 2018, all new vehicles needs to have AEB, so this positions us very good because we have strong relationships over there. So AEB, for example, has a lot of limitations still. It's limited by speed, it's limited with the targets that the vehicle can recognize. It will not stop the vehicle upon a small animal or a target that is not specifically recognized as a pedestrian. For example, someone carrying a cart or boxes or even holding an umbrella may not be recognized by a vehicle, and the vehicle will not automatically stop if the driver is not aware. So you still have a gap, not talking about weather conditions and other driving scenarios and situations. And we are focusing on being the bridge to that gap and providing even a much, much better active safety system that will get us to the 100% uncontrolled environment for autonomous vehicles. That's what we focus on, and this is why we think and we know that we have a significant role in the industry, although we started a little bit late.
You also have a technology that's a little different than everybody else, don't you? Most have, what is it, a monovision camera? And you have the stereo vision, which is 2 cameras, I believe, correct?
We use 2 cameras to render a 3D image of the environment. We measure distances and depths, and we get a depth perception of the environment in order to get all the needed parameters to make 100% detection with no false alerts, no false positive, no false negative. This is our claim for fame, and this is what we're focusing on.
So Miri, Ariel's in Israel, okay? And every once in a while, there's a problem in Israel, okay? It's inevitable. It happens. 2006, 2009, 2014, there were wars. How do you advise your clients like Ariel to handle investor calls and investor angst when there is some sort of a crisis?
Yeah, that's a great question, and I think that many people will be surprised or not surprised to know that because it happens so often in Israel, and Israel is so resilient, investors even stopped asking about it. And I remember times, I've been in the business for almost 20 years, out of which 12 I've been here in the US. And as you mentioned, there were several wars. And every time when we would prepare a client for a conference call, so we would say, okay, if you're gonna be asked about how do you deal with it, let's answer this, let's say that. And you know what? We were not even asked about it, because I guess that by now, first of all, it happens all over the world. Unfortunately, it's not just an Israeli unique issue. And like here, on the day of Halloween, something happened downtown, and in the evening, the whole city was in costumes out in Halloween. So in Israel is even more resilient, and they've been used to that for years. So I've worked at times when there was a siren, they would tell me, oh, wait on the line, we're just going down and we'll be back in a few minutes after the siren is over, and we'll continue the discussion. And that's it. So it's not even an issue anymore.
So, Crystal, you've worked a lot in the autonomous sector. Can you tell me, look ahead to maybe what you see the next hotspot is in Israeli technology? Can you answer that?
Sure. So, I'm by no means the expert versus Noor here, but the way that our tech-enabled transportation practice, views the future, there's obviously, like your ride-sharing guys have changed the landscape of transportation. But the way that we look at it is what we kind of call mobility 2.0. So, if you think about how you're sitting in your Uber or your Lyft or your Via, you're consuming content so much already as is. And by the time we kind of hit this next wave of mobility 2.0 and this tech-enabled transportation world. I mean, the way that we focus on it is like who will be the winners in terms of kind of connecting all that data, working through like the connected car, the content providers. So that's kind of where we're taking a look at it because, I mean, right now there's so much in the space of kind of LiDAR, sensors, whatever it might be. Like there are probably 40, 50 companies in each of those spaces competing, and only time will kind of tell us who emerges and who starts kind of how the industry starts to consolidate. So we take kind of a much longer term vision of it as kind of who's going to win from that content perspective, who's going to win from that data perspective. That's how we view the space.
That just brings up a question about executives in Israel. Okay, from what you've seen, guys who take their or women who take their companies from the start to the bottom, from the bottom to the top, and move up more. Are they more? How are they different from Americans who do something similar in your experience?
Sure. I mean, what's been striking for me, because I was working kind of across U.S., European, like just all like global companies. When we started to work more with Israeli companies, I've come across so many more founder CEOs, and I think the primary difference is there's a level of credibility that's built with the founder CEOs. And there's a level of commitment and passion to the companies that you don't necessarily see in some of your other publicly traded companies from other regions. And I think that resonates really well and translates well. I mean, at the same time, too, we do run into Israeli management teams that are a little bit more kind of, I guess, set in their ways, where we have to, what Miri was talking about, Americanize, she's smiling a little bit there, where we do have to Americanize the way that they're messaging out, because what we find sometimes are the founder CEOs are very, very technical in their explanations of talking to investors, and sometimes investors just want to see what that big picture is, what that big theme is, and we've had instances where we sit through Israeli investor presentations, and it's like 30 minutes in, and you finally get to the crux of the story. And that's where we want to be able to step back and work with those management teams a little bit more, where it's like, this is a really good story, but you need to step back and kind of get out of the weeds. And that's probably some of the pitfalls, though, of being those founder CEOs.
Great. I think we're close to time. Does anyone have any questions before we let these guys go from the audience? Anyone? In the back.
What can Jefferies and various investor relations do to help Israeli institutional investors get exposure to the companies not listed in Israel? When you go on roadshows, are you including Israeli institutions in that pitch, or is it really focused on North American and international investors?
Did you hear?
Sorry, so the question is how to get exposure for Israeli investors. Sure. So the tech track, for example, brings forth, I think, over 100 local institutional investors in Israel. So it's providing exposure in that sense. And when we're taking companies out on non-deal roadshows, it's to kind of the global base. So Israeli companies and non-Israeli companies are traveling through Asia, through Europe, on occasion through the Middle Eastern regions, Australia, the U.S. So it's kind of, we're not limiting just to the U.S. investor base and all that.
And
to that point, Josh, a lot of the times it's the Israeli institutional investors that are asking us to take these companies on the road and give them exposure ex-Israel to help kind of raise the awareness. So a lot of times they're the actual origination of the roadshows sometimes. So it may not have a banking angle, it may just be that you want to get the company around type of story.
Yeah, they're purely just good stories that we want to give exposure to, and otherwise they would get lost in a conference of 200 companies.
Great. I think we're at time. Anyone else have anyone before we go? Okay. Thanks, guys, very much.
Thank you.
Great job. Really great job.